Real Estate Radio TV, the web radio 100% dedicated to real estate.
Welcome to Real Estate Radio TV for a new interview. In today's interview, we have the honor to welcome Gabriel, the U.S. Business Development of DigiShares, a tokenization tech stack provider specializing in real estate tokenization, to talk to us about real estate tokenization. Hi, how are you today?
I'm good, thanks. How are you?
Good. It's a great pleasure to have you on. Also, to start off, could you give us a little bit of an introduction of yourself, talk a little bit about your business background, as well as your role inside of DigiShares?
Absolutely. So I'm Franco-American. I went to business school in France. After that, I worked for a small investment bank in New York City for 2 years, where I was working mostly on helping private equity funds, venture capital funds, hedge funds, raise capital. So during those 2 years, I saw that private markets were very ripe for innovation, because investing in a private market opportunity, you're locked in to your investment for 5, 7, 10 years sometimes. To raise capital, even for the best funds, it takes like 9 months. And usually it's only the institutions and wealthy families that can invest. So I got interested in technology that could solve this issue. And of course, stumbled upon smart contracts and blockchain, which we'll talk about, and was looking for companies in that area. And that's how I joined DigiShares.
So you went from working in a traditional finance path, investment banking, private equity, to getting on to a disruptive financial path, which is blockchain and tokenization, which is the topic of this interview. So talking about DigiShares, what exactly is it provide in terms of services, and what benefits does it bring to the real estate and blockchain environment?
Absolutely. So what we provide is a tokenization tech stack. So we help real estate developers, funds, and companies to create digital shares on the blockchain, which are called tokens. So we enable the actual creation of the tokens, and also we provide the white label investor portal through which people can buy the tokens and then receive distributions from the tokens. And a bulletin board marketplace where people can then trade the tokens peer-to-peer, or we can plug our clients into larger exchanges where they could trade the tokens. And we're actually also building our own decentralized exchange in Europe, in partnership with Balancer, which is one of the big names in decentralized finance. So we're quite excited about that.
So DigiShare is really a service provider, providing the technology of tokenization to real estate developer, general partners. Am I right?
Absolutely, that's correct.
And so, how would you describe this new concept of tokenization of real estate, and how does it differ from traditional securities? And could you give us a little bit of an overview of the blockchain technology for our listeners?
Yeah, so I'll start with blockchain and then define smart contract and then real estate tokenization, so that everything will be more clear. So a blockchain is a very large ledger or database which exists on a decentralized network of computers. So instead of having the information in a hard drive somewhere or on the cloud in a server, the information exists on thousands and thousands of computers, potentially. And the only way to add information to the ledger, such as a transaction, is through a complex validation method that uses cryptography. So it's secured by cryptography. So that's for the definition of a blockchain. So that brings me to smart contracts, which is what we're talking about here with the tokens. So here, I mean, when we talk about blockchain, people usually just think Bitcoin.
Right.
And then a lot of them know Ethereum, but think it's some sort of replacement of a potential replacement of Bitcoin. But that's actually quite far from the truth. Bitcoin is a digital store of value, like digital gold, and some say it can be used as a currency, but I kind of doubt that. But anyways, Ethereum is totally different. It's a protocol which enables you to create smart contracts. Okay, so what is a smart contract? It is a contract where the terms of the agreement are embedded in lines of code, and that code exists on a blockchain network. So instead of having your traditional contract, which is a Word document with sentences and both of our names, and then we sign the contract and trust each other and trust the laws of the country, well, you have basically just code, and it'll self-execute. You don't need anybody to enforce it. So it creates a trustless system. So that's kind of for the smart contract, which then exists on a network like Ethereum, for example. And real estate tokenization is the process of creating a digital smart contract, which represents ownership in an SPV that itself owns real estate. So that would be for the definitions.
So really, the difference from a traditional investment and security offering is that the tokens and shares are basically stored on the blockchain, which could be defined as a software that is decentralized, right?
Yeah, I would say a network,
a
decentralized network of computers. So instead of owning like a paper or digital traditional share, you own a token, which exists on a blockchain, and the token represents ownership in a legal entity that owns real estate.
Right. And so, any business model, in order to be successful, has to offer a solution to an existing problem. And what problem does real estate tokenization thrive to solve in the real estate industry?
Yeah, so the big problem with the real estate market is that it's highly illiquid, which means that when you invest, I mean, first of all, you need very large amounts to invest usually, and not everybody can afford that. And then once you do invest, you're usually locked in for years. So the problem that creates is what's called in economics the illiquidity premium. So to explain that in very simple terms, let's imagine two identical real estate developments. For the first one, the GP tells you, well, in 24 hours, if you change your mind, then you can exit your investment. And for the second one, the GP tells you, well, you have to wait 5 years before you can exit. Well, you're going to say, okay, I mean, I could be interested in the 5 years option, but only if I get a large discount on the valuation, or if I get higher returns, which is basically saying the same thing. Well, that's the illiquidity premium, and so the more real estate assets are put on the blockchain, the more value that developers and funds will be able to capture, and it's also a win-win for investors because they can then exit their investments, and it'll help democratize access if you have like a very deep secondary market of real estate token trading.
Right. So bringing an illiquid asset, which is of course real estate, to turning it into a liquid asset. We could maybe compare it to even though it's not the same thing, but when you have a private company and want to do an IPO and putting it public, it makes trading the shares much faster and much easier, making it a liquid asset, which in real estate it did not exist. Apart using REITs and all that, but it's different, and now there is real estate tokenization. Am I right?
That's an excellent comparison, and I would also add another benefit of tokenization on the capital raising side. so the primary issuance market. It's that it automates a whole bunch of processes and makes the capital raising process less painful and faster. So by embedding a lot of compliance. For those that use Excel, it could be if-then statements, formulas that are embedded in the smart contract. So like you can say, if the investor completed KYC, then they can invest in the token. So, and you can have a whole bunch of processes like that that are automated and digitized.
Could you walk us through the process of using tokenization to buy real estate asset from the time you issue the coins on the real estate asset, to the capital raising stages, and the process of being able to sell some shares once the asset has been bought?
Yep. So the issuance of the tokens is a fairly simple process. We, for example, DigiShares provides a token studio, so you can issue tokens through that tool, which is like a dashboard where you have different parameters, and then you click and it creates the tokens. Then for the capital raising stage, you have to go through, like for any investment that's compliant, you have to go through KYC, so know your customer. Then once you're green lighted, you can e-sign the subscription agreement, and then transfer your US dollars or USDC stablecoins. So stablecoins are cryptocurrencies that are always equal to $1. They're backed by actual dollars. So you transfer the funds, and you can easily acquire the tokens. And then for selling the shares, there are two ways of doing that. Either it's on a bulletin board marketplace like ours, where you just say, I want to sell 10 tokens at $50 a token, and then it lists on the bulletin board, someone can click and buy. Or if the GP is plugged into an exchange, you just go on the exchange and sell on there. So those are the different ways you do it.
So basically, once I have shares, I can go on different platforms. How does it work? Is it through a platform, a website? I have to list my shares. How does it exactly work?
Yeah. So on the primary side, so the initial capital raise, you would have a website of a real estate developer. They present the asset, and then you have like an Invest Now button. You click, you're pushed into hopefully the DigiShares backend, and that's where you go through KYC and the signature and buy the tokens. Whereas if you're selling, and on the secondary side, if you're selling, for example, on an exchange, you have to just create a brokerage account with them. So the leading ATS, alternative trading system in the US, is called T0. So it's basically, I would imagine them as a Coinbase for security tokens. So you just create a brokerage account with them, and we integrate, both of our technology integrates. So you just create an account with them, and you can sell your shares on that market.
So a pretty straightforward process. And one of the main benefits from real estate is having the ability to get cash flow, also known as dividends. So how do you, once you have shares and tokens, how do you get paid in terms of cash flow, refinance, and also sales proceeds?
Yeah, so any kind of distribution will be sent to whoever the owner that's recorded on the blockchain is. So, and the blockchain is, again, you can't hack it or alter it. It's immutable. So for example, from our platform, you can just, we have integrations with payment providers and digital banks, and you just say distribute X amount of funds, and then it'll distribute it proportionally to the ownership to each token holder, whether that's in dollars, traditional dollars, or stable coins.
So pretty straightforward process, and really it's very similar from traditional security offering. But what are the differences from a traditional and digital security offering from a legal perspective, and also what are the check and balances in place to protect the investors investing in through real estate tokenization?
Yeah, so the main thing to know here is that the same laws apply, whether we're talking about a security token offering or a traditional share offering. So in the US, there are SEC exemptions for these kinds of offerings. People may have heard of Reg D or Reg A plus, things like that. So these are the same protections or regulations that are meant to protect investors. Now we can debate on, whether that's a good thing, that you have these accredited investor laws,
right,
which are preventing a lot of people from investing in real estate in an easy fashion. But those are the regulations of the country, and you definitely have to respect them. And yeah.
Right. So basically the same regulations, from traditional security offering in terms of accredited investors. The process is the same, and also what needs to be respected. And so, could you give us an example of an investment that was offered, through real estate tokenization using your tech provider, your firm DigiShares?
Yeah. So a couple of examples. So one of our clients is Red Swan CRE. So you can find them at redswan.io. They're a commercial real estate investment platform. They've tokenized quite a few properties already. So a couple of examples of some of their properties are the Hello Lenox building in Brooklyn and the Lake House building in Oakland. We also have another client called Market Space Capital out of Houston, Texas, and they're tokenizing a building called The Spot at Myra Park in Dallas, and that's actually going to list on T0, the ATS. So people will very soon be able to buy those tokens on T0 in the next few weeks, probably. Yeah.
And do you see also a momentum from the institutional side, getting into real estate tokenization, or no?
Yeah. So for example, Market Space Capital. They're quite large group of people that them and their affiliates. They have about $1 billion in real estate assets total, and even also the people that are listing on Red Swan, our other clients. These are very large projects, sometimes over $100 million, and we definitely see institutions
moving into
getting
the space.
Involved, and especially to provide an easier process for their clients to invest in the private markets. So we're contacted by a few of them to set up a proof of concept projects.
So many different opportunities. And also a question I had is there any other opportunities that can be made, through tokenization apart from real estate tokenization? Maybe, tokenizing private equity funds. Is this something possible?
Definitely possible. In general, I would say most kinds of legal entities can be tokenized in the jurisdictions that enable it. So
right, sure.
Wyoming, Delaware, there are many others in the world, like the UAE or Luxembourg. So you have many examples of jurisdictions that are quite in advance. I mean, on tokenization legislation, and there, I mean, so we have clients. That one client, for example, is a whiskey distillery. Another client operates precious metal mines. So you can really tokenize almost anything. Even, and I'm sure you've seen this whole buzz around NFTs, you know, and
Right, sure.
digital art. So it's really could be anything.
Yeah, so from my understanding, huge opportunities not only in real estate but also in the private equity sector, and that will really change, in my opinion, the way private equity firms work. And so, how do you see the future, you know, of real estate tokenization and tokenization in tokenization in general in the upcoming 5 to 10 years? Do you see it that is something that is going to become mainstream in a way?
Yeah. Yes, absolutely. So I think that in 5 years, especially 10 years, I would hope that by then most private market assets, and including, you know, most real estate assets, would be on the blockchain, and that people could invest and trade their shares in these assets as easily as they trade Google stock on Robinhood, right? So and this will enable more and more people to participate in the wealth creation machine, right? That is global
Sure.
markets, capitalism, you know, real estate investments that are making a lot of people wealthy today, but usually it's people that are already wealthy and institutions. And so hopefully, like in 5-10 years, it'll be really democratized and anybody can buy, sell, trade private market shares.
Democratized for everyday people, and we already see that happening, like you mentioned, in the Bitcoin, Ethereum, where, you know, everyday people can invest in a way which, you know, was not possible before.
Yeah.
And you were going to say something?
Yeah, I was going to say, but your other example before was also great with the IPO. Like, you know, before the public stock markets, people couldn't participate in the wealth creation which was generated by companies, right? And today you can invest $1 in like a small cap stock, and that can maybe 10x over 10 years or something, right? So if you have a diversified portfolio, you can, you know, I mean, I'm not giving investment advice, of course, but you can benefit from this, from the wealth creation of private companies.
Right, and talking about IPO, it's very hard for, you know, everyday people to get involved into IPO. They're oftentimes reserved for, you know, investment banks and all that, which makes it very hard, you know, for people that want to invest in a company once it goes public. And I think, you know, tokenization can be a good answer to that, and also maybe in the future we're going to see less companies going public because they're going to think tokenization is a better way to go about it. And that's something.
Yeah, it'll be unnecessary to go through, you know, an IPO process, and we're already seeing, even without tokenization, a lot of companies do direct listings or SPACs. So people already are fighting against that process because, as you said, it can be quite unfair, and tokenization would be like a further step down that road.
One last question I had is in regard to stablecoins. We hear it in the mainstream media that, you know, some stablecoins are actually not backed by the US dollar. So what are your thoughts about, you know, stablecoins in the cryptocurrency sphere?
Yeah, so I mean, there's stablecoin and stablecoin, right? There are stablecoins that are well governed and have very transparent processes and auditing in place, like the USDC stablecoin, which is managed by a group which contains Coinbase and Circle and other, you know, other major companies in the field. And in that case, I mean, you have actual dollars backing the stablecoin. There were other cases where actually there weren't dollars, or at least not
Right.
one-to-one, right? It was some other type of investments, like short-term investments. So that's where regulators, are looking at, are these stable coins actually stable coins? And so it'll be interesting to see how they legislate. But it's definitely important to have protection for investors, because if someone comes out with a stable coin, you really want to make sure it is
Sure.
well governed and audited. So
same goes with cryptocurrency. I mean, we see
yeah.
large cryptocurrency very well managed, but also other cryptocurrencies that are not so well managed. So it's a new market. Hopefully there's going to be some legislation to protect individuals. I think that's something important. And also it's important that everybody does their own research before investing. The information's out there on the internet. You can practically find any answers in terms of this new model. So is there anything we maybe haven't talked about that you wanna address before we finish this interview?
I think we covered a lot. I would encourage people to look at what's happening in decentralized finance. It's really quite exciting. We envision in the next few years that you'll be able to take your real estate tokens and then get a DeFi loan off of that. So you could really decentralize that part too, with institutional versions of DeFi protocols like Aave, for example, which would be rendered compliant. So where you have like a KYC at entry. So these are projects and developments that we're quite excited about, and we hope to integrate also to our decentralized exchange.
Well, thank you. Lots of great opportunities coming in the upcoming years for DeFi. It's going to be a great time. Guys, make sure you download our app, both available on the App Store and Android. We're also going to put your different contact information in the bio. So if people ever want to reach out, if they have any question, or if an investor is potentially looking at tokenizing his own assets, make sure to reach out to Gabriel, a great guy, and see you soon.
Thanks a lot. Great seeing you. Bye-bye.
Real Estate Radio TV, the web radio 100% dedicated to real estate.